You work hard, save diligently, maybe even invest a little on the side, all to build a secure future for your family. But here's a thought that most people overlook. What happens to that financial plan if you're not around to see it through? That's where term insurance comes in. It's not about chasing returns or building wealth, it's about safeguarding the wealth you're already building, ensuring that your absence doesn't erase everything you've worked for. Hi folks, I'm Shashank from Ditto Insurance and welcome to the first episode of our brand new series, Term Insurance 101. This is going to be your complete, in-depth, no jargon, information-rich guide to understanding term life insurance. These videos might be slightly longer than Health 101 episodes, but they'll be worth your time. And if you want to check out Health 101 series, I'll link the playlist in the description. So our goal is pretty simple, to help you make informed decisions without getting lost in the jargon or any sales talk. In this video, we'll walk you through what term insurance really means, how it protects your family without complicating your finances, what's covered, what's not covered, and why in most cases it's the smartest first step in any long-term financial planning. So let's begin with the fundamentals. What exactly is term insurance and why should you care about it? At its core, life insurance is a financial agreement between you, the policyholder, and an insurance company. You pay the insurer a fixed amount regularly, and that's called a premium. In return, the insurer promises to pay your nominee a lump sum of money called the sum assured if you pass away during the policy term. Now, this is not just about money. It's about providing financial security to the people who depend on you. If you're the primary breadwinner in your family, this contract ensures that your loved ones are not left financially stranded in your absence. This is the foundational principle of life insurance: protection. Not savings, not investments, but pure protection. Now, it might surprise you that you can't insure everyone under your plan. Let me explain. There is something called as insurable interest that governs who you can insure. You must have a legitimate financial or emotional interest in the person you're insuring. For example, a husband can insure his wife, and vice versa. A parent can insure their child's life, and even a company can insure a key employee. You can't just buy life insurance on a random person's life and hope for a payout. That would be unethical and illegal. The principle of insurable interest exists to ensure that insurance serves its core purpose: protection, not speculation. Now, life insurance comes in many forms: term insurance, endowment plans, money-back policies, whole life plans, and ULIPs. Each of them comes with a different structure, purpose, and benefit. Let's break them down quickly. Term insurance is the purest form. It offers coverage for a fixed term. If the policyholder dies during the term, the nominee gets a sum assured. If not, there's no payout. It's simple, affordable, and meant solely for protection. Whole life insurance offers coverage for the policyholder's entire life, typically up to the age of 99 or 100. It may include a savings component. Endowment plans. They combine life insurance with a savings plan. You get a payout either on death or on maturity. Money-back plans give you periodic returns during the policy term, and also death benefit if the policyholder dies during the term. ULIPs, or unit-linked insurance plans, mix life insurance with investment in equity or debt markets through mutual fund units. They are market-linked products that carry investment risks. Now, at Ditto, we are very clear on this. Insurance is not meant to give you returns. Insurance is a protection tool. If you want to invest or grow your wealth, there are far better products in the market. But when it comes to protecting your family financially, nothing beats term insurance. So if you'd like to chat with us for free and get the best plan for you, then book a free call with Ditto. The link is in the description below. Now, let's understand why term insurance stands out. See, it's the most straightforward and cost-effective form of life cover. You pay a relatively low premium. In exchange, your family gets a high payout if you're no longer around. There are no investment components, no bonuses, no savings angle. And that's exactly the point. It's high leverage financial protection. You spend a few thousand rupees a year, and in return, your family could receive a payout of 1 crore rupees or more. If you survive the term, there is no return. But remember, the goal of term insurance isn't to get something back. The goal is to ensure your family doesn't face financial ruin if something were to happen to you. Think of it as paying for a fire extinguisher. You don't expect a return. You hope you never use it, but in case a fire does break out, It could save everything. Now, let's understand this with an example. Let's say a 30-year-old buys a term plan with a 1 crore sum assured for 30 years. They pay a fixed premium every year. If they unfortunately pass away at age 45, the nominee receives 1 crore rupees. If they live till 60, the policy ends and no money is paid out. That's how it works. Simple, transparent, and extremely effective. Okay, now, term insurance covers almost every kind of death, as long as you've been honest during the purchase process. It covers natural deaths, like those due to old age, cancer, heart diseases, or other illnesses. Accidental deaths, such as road accidents, fire injuries, electrocution, or drowning. Critical illness-related deaths, such as kidney failure or cancer. Deaths due to domestic or international travel, including commercial flights. Deaths due to pandemic like COVID-19, provided the policy was active before contracting the illness. Deaths due to natural disasters like earthquake or floods. Deaths from terrorist attack or criminal acts, where the policyholder is the victim. Even death by suicide is covered after the first 12 months of the policy as per standard IRDAI regulations. In other words, if you died during the policy term and the policy was active, your nominee is highly likely to receive the sum assured. Now, there are some important exclusions you should be aware of. First, non-disclosure or misrepresentation. Let's say you hide critical information during purchase, say a serious medical condition or your smoking habits. The insurer can reject the claim outright. That's why honest disclosure is crucial. Second, deaths arising from illegal or criminal activity are not covered. For example, if someone dies while committing a crime, participating in riots, or under the influence of drugs, the insurer can deny the claim. Third, hazardous activities like skydiving or deep sea diving may be excluded unless disclosed and approved in advance. Fourth, if the nominee is under investigation for death, say in case of a homicide, the insurer will wait until the legal process is completed. Now, if the nominee is found guilty, the payout goes to the legal heir. Lastly, suicide is not covered within the first year of policy inception, and after that, it is. Here's an edge case though. If the policyholder goes missing, the insurer won't immediately pay the claim. Under Indian law, a person must be declared legally dead after 7 years of continuous disappearance. During this time, the nominee must continue paying premiums to keep the policy active. If the policy lapses before the court declaration, the claim may be rejected. That's important to remember. Now, you may wonder, what if the insurer just refuses to pay? Well, here's the truth. Most genuine claims are paid because their reputation depends on it. At Ditto, we've seen this up close. The vast majority of rejections happen only when there's fraud, non-disclosure, or a clear breach of policy conditions. So, as long as you're transparent, you don't need to worry. So, to recap, term insurance is not about returns. It's about protection. It's about making sure your family can move forward financially, even if you're not there to support them. In the next episode, folks, we'll tackle a big question. How much life cover do you really need? 1 crore, 2 crore, 5 crore, or 10 crore rupees? We'll break it down step by step. And if you're unsure about which policy to buy or how to disclose your details properly, book a free call with our advisors at Ditto. There will be no pressure, we will never spam you, and we will give you our honest guidance. And our services are completely free. The link is in the description. Thanks for watching, folks. I'll see you in the next episode of Term Insurance 101. Until then, happy insurance hunting.